Welcome to Yahoo Finance's flagship show, Morning Brief. I'm Julie Hyman. Let's get to the three things you need to know today. First up, U.S. stock futures a little changed. That's after the major averages closed in the red yet again. This S&P 500 recording its fourth consecutive day of losses. That's the longest losing streak since August. The benchmark index has now fallen 3% this month. That's on track for its worst November since 2008. But the big focus for investors will be after the closing bell. Nvidia earnings, of course, it's the day. Analysts expect the chip giant to show more than 50% growth in both net income and revenue in the third quarter. However, there is growing concern on Wall Street about AI spending and valuations. Any pullback in big tech spending on AI could directly affect the company's trajectory. Options data show the results could trigger a $320 billion swing in either direction. Nvidia shares are up about 35% this year. And retailers are out with earnings. We've got Target, Lowe's, and more reporting this morning. Target lowering the top end of its profit outlook amid soft demand. The retailer plans to increase capital spending to $5 billion next year to fund renovations, new stores, a better shopping experience as well. Target's new CEO said they're relentless in their pursuit of returning to growth. They're not satisfied with the current results. Meanwhile, Lowe's profit topping expectations amid a pickup in online sales and demand from professional contractors. Those results mark a minor bright spot in retailer results this week. Remember, just yesterday, Home Depot cut its full-year profit target as consumers pulled back on bigger ticket purchases. Let's go check in on stock futures. We are seeing a little bit of green here on the screen, modest indications for gains at the open here after this deep sell-off that we have seen. Really, the pivot point, of course, is going to be Nvidia after the close of trading. Right now, the NASDAQ is pointing to the biggest gain of the three major averages, looking for about 1/3% increase at the open. Let's dig into our top stories of the day now. The S&P 500 looking to snap a 4-day losing streak, and everybody's watching Nvidia with the chip maker set to report after the close. Plus, Target and Lowe's earnings gave us a fresh read on the consumer. Joining me now, markets and data editor Jared Blickery, tech editor Dan Howley, and senior reporter Brooke DePalma live at the NASDAQ. Jared, let's start with you and the setup going into today after this sell-off that we have seen.
Yes. Do you think we have talked about the 50-day moving average enough?
Never.
Okay, one more point here. And first, let's just look at the gains that we're seeing across the world. So it's kind of a split picture. Yesterday it was mostly negative 24 hours ago at this time. So a step in the right direction here. But let me take you through the Dow over the last 5 days. All the majors have lost their 50-day moving averages. It's a key technical level. What happened yesterday, the SOX, the Philly Chip Index, and Nvidia also closed below those levels. A little bit ominous, but it's just probably a yellow warning flag for investors. So you see the Dow here down 3.83% over the last 5 days. Here's the S&P 500, very similar. And the Russell 2000, just a little bit more. The small caps usually a little bit more volatile. I just want to talk about volatility for a second here. We have seen the VIX on the rise. And if I show you the last month, let's actually go to 2 months. We have had two volatility scares in this time frame. One was in mid-October with China, proposed new tariffs by President Trump. That never really panned out, fortunately for investors. And here we have another one. And just a reminder, the VIX tends to spike in October and November, despite the fact that October and November tend to be positive months. So a little bit of a dichotomy there, something to rattle around in your brain. When we have good months, we tend to have very good months in these, but when we tend to sell off, those tend to be some of the worser months. And then I think that kind of lends to credence to your stat of worst November, at least we're on track for that since 2008. We can also check out the sector action. Just want to show you, this is going to be what happened yesterday. Tech and consumer discretionary, what I just circled there, those were the biggest losers. Energy was the biggest winner along with healthcare. But now let's throw on the pre-market stats. We have yesterday's biggest loser turning into today's biggest winner pre-market. That would be consumer discretionary. Also seeing some strength out of the mega cap sector, communication services, utilities, materials, real estate, tech, all of those on the top line, plus industrials and financials on the second line, looking at gains. The worst performing sector here in the pre-market is energy. And I'll just give you a quick look at the NASDAQ 100. If we have time, I got some Nvidia stats for you. You can see it was down 2.81% yesterday, up 1.75% in the pre-market.
Well, and Jared, speaking of Nvidia, I mean, you know, it's not as though expectations are running as high going into this report. at least the stock isn't, right? So in other words, it's perhaps going to be easier to move to the upside after the slump that we've seen.
Yeah, well, let me just throw some stats at you here. Nvidia over the last 3 months has done exactly nothing. It's basically flat. Meanwhile, analyst target price has risen from about 200 on its last earning day in late August to $237.18. That is a 19% rise. So the question is Nvidia going to catch up to that level, or are they going to disappoint and are analysts going to have to come down? We know that analysts tend not to come lower their projections on a stock like Nvidia that has done so well over these last few years. So I would lead towards the former. But here's another stat. Trailing quarter volatility for Nvidia, the average daily range over the last 90 days has been 3.4%. That is historically low. We've seen that much higher in years past and quarters past. And then the options implied volatility, that's what options traders are expecting the move tomorrow to be after this report, digesting all those numbers, about twice that, 7%. That's pretty normal, but that is also, well, it's normal that it's twice the actual average true range over the last 90 days, but that number was much higher in the past. I've seen that 10, 12%. So in general, Nvidia volatility has been coming down. Analyst expectations are pretty high right now, yet the stock has done nothing over these last 90 days.
We will see if anything changes after the close. And whether it's going to change or not will depend on what we hear, Dan Halley, from the company. I mean, we've been talking a lot in recent days about what to expect from Nvidia. So, now that the day is finally here, what are you hearing in terms of what's really going to determine whether investors and traders are disappointed or not? Like, what are going to be those key pivot stats?
Yeah, Julie, there's an interesting kind of piece that Gene Munster at Deepwater Asset Management had put out saying that this is basically going to be a catch-22 for Nvidia, in that if they report, they beat and raise, then people will continue to say, oh, well, the AI build out is overblown. There's too many people building out these data centers. This is clear evidence of that. If they don't beat and raise, then it's, oh, well, the AI bubble is starting to burst. And so it's these two kind of, opposing directions that we could see Nvidia go in. But the other is to just keep in mind what's happened in prior earnings reports, where we saw Nvidia report, they didn't have 200% growth as they had for, a quarter or two, and the stock price drops. And so that could be something that we see. It will gradually start to go up again, but it could just be those immediate shocks after the earnings themselves. So obviously people are going to be looking out for the increase in Blackwell sales when they'll start shipping Vera Rubin at scale. That's their next gen. They have Blackwell Ultra as well. And then really what's going on as far as the data center hyperscalers. And so those are the Microsofts, the Googles, the Amazons. They are responsible for around 50% of NVIDIA's revenue, but they're increasingly relying on their own chips as well as chips from AMD. AMD announced that they had a deal with Oracle, with OpenAI, and they said that they have several multi-billion or gigawatt scale projects in the offing right now. So they haven't announced anything in particular from that, but it does prove that the competition is heating up. That said, NVIDIA still controls anywhere between, estimates are 75 to 90% of the market. So it's not as though they're going to be hurting with that additional competition, but it absolutely is something to look out for.
So while we wait for NVIDIA, we actually have some numbers from other companies. Target is one of them, Brooke. And so let's talk about that, because the indication is not great. Although, we got to sort of tease out here how much is Target and how much is underlying consumer weakness.
Right. Well, think about who exactly Target caters to. It's catering mostly to a consumer who's looking for discretionary goods. So maybe those beauty, electronics, and Target hopes eventually you'll go to Target for their grocery section as well. But ultimately, all this backdrop, they say, what the executive said on the earnings call this morning, is this choicefulness among consumers who are stretching their budgets right now and really prioritizing value. And that's what they said led the company to cut their full year profit outlook for 2025. The company also reiterated that it does expect a low single-digit sales decline in the fourth quarter. And keep in mind, the fourth quarter is supposed to be robust. It's the holiday season, and yet Target is here expecting a low single-digit sales decline. They said that they're mindful of the challenges that consumers are facing right now, and that's exemplified by recent declines in consumer confidence. And so that's ultimately what they say is how consumers are approaching this fourth quarter, this key holiday season. And also keep in mind, we have a new CEO, an incoming CEO, Michael Fidelki, who's been a long-time Target employee, but he also is really looking to advance how Target plays with tech. And that's why this morning you heard that Target partnered with OpenAI, and exactly how that will work in a few weeks, or rather next week, they're beginning to test out a beta, a launch within ChatGPT where consumers can type in Target and then say what they're looking for, like say a holiday movie. That will then open up the Target app within ChatGPT, suggest a few items consumers can build up, or shoppers can build up their cart, and then it will go to the Target app. And this just really signifies that the new CEO who's incoming, as Brian Cornell is expected to retire, really shows that he's trying to double down on tech, get back what, Target used to be known as Target, get back that feel and that touch in the merchandise, but also really integrate Target into everyday conversations that consumers are already having with ChatGPT. And I did get to chat with the chief product and information officer at Target in an exclusive interview last night, and he said that Target is the first retailer to really do this, to have a conversation curation in retail space. And so it'll be really interesting to see how this plays out, especially since Walmart recently announced a partnership with OpenAI as well.
Yeah, definitely. The list of companies that don't have a partnership with OpenAI, it's getting shorter and shorter. We had Intuit yesterday. In any case, Lowe's, I guess, doesn't have a partnership that we know of yet with OpenAI, but their numbers looked a little better.
Their numbers did look a little better. We are seeing a bit of a pop in the pre-market hours here for Lowe's, as investors really look to the company and say, hey, Lowe's seems like it's doing better than their most closest competitor, and that's Home Depot. And that's why you're really seeing this momentum this morning and this optimism among investors. What we heard from that report, that call is currently underway, but what we heard from the release is that sales were slightly better than Home Depot yesterday. They did see an increase of about 0.4%, and that was driven by an 11.4% increase in online sales growth. They saw double-digit growth in home services, and that pro business that Lowe's has really trying to get in on after its DIY customers really pulling back in this housing market. We're not really seeing the housing market improve, so now they're getting into the pro business. That all did really well for them this quarter. Also, while they lowered their earnings guidance for 2025, they did raise their total sales guidance. They now expect total sales to come in around $86 billion for the year. And what we're hearing, Redford, on the street is that ultimately it seems like Lowe's is doing better in this environment and not as good as what Home Depot, or rather Home Depot, sort of painted this really bleak picture about the lack of storms leading to lower sales decline in the third quarter. And, moving into the end of the year, things aren't going to improve in the housing market. But Lowe's seems to be painting this better picture. They're able to sort of hold up in this environment as consumers aren't really turning over to new houses. And that's why Wall Street is optimistic this morning.
Yes, so a little bit of green there. We'll see how Nvidia plays out after the close of trading. Jared, Dan, Brooke, thank you so much. Appreciate it. Well, former Harvard president and U.S. Treasury Secretary Larry Summers is stepping down from the board of OpenAI. His resignation follows the release of his correspondence with the late sex offender Jeffrey Epstein. Summers joined OpenAI in November of 2023. He had been nominated to the board for his deep ties to Wall Street and to Washington. The emails between Summers and Epstein were released by the House Oversight and Government Reform Committee as part of that trove of documents from Epstein's estate. In one exchange, Summers and Epstein discussed the topic of public attitudes towards allegations of sexual harassment. Summers was emailing with the sex offender as recently as 2019. Summers released a statement saying he takes full responsibility for what he called his misguided decision to continue communicating with Epstein. OpenAI's board said they respect Summers' decision to resign. They appreciate his contributions and the perspective he brought to OpenAI. Now, while Summers said he is stepping back from his public commitments, the former Harvard president is still a faculty member at the elite university. Massachusetts Senator Elizabeth Warren has called for the school to cut all ties with Summers. Coming up on Morning Brief, we'll bring you today's top trending tickers and count you down to the opening bell. We'll be right back. Now time for some of today's trending tickers. We are watching Adobe, TJX, and Unity Software. First up, Adobe. The design software firm has agreed to buy marketing software company SEMrush for $1.9 billion. It is the first major takeover announced by Adobe since its failed attempt to purchase Figma. SEMrush is a platform that allows businesses to analyze their online marketing, including how their company appears in AI search results. The all-cash deal expected to close in the first half of next year. Next is TJX. The parent of TJ Maxx and Marshalls topped expectations for the third quarter. The discount retailer also raised its outlook. It's a sign that shoppers are turning to cheaper options as the economy shows signs of stress. TJX also gaining an edge on other retailers who've been pressured by tariffs since the company acquires inventory that hasn't sold at full price in other stores. And Unity Software shares are jumping on a collaboration with Epic Games, the company behind Fortnite. The partnership aims to integrate Unity games into Fortnite, potentially expanding Unity's market reach. Developers will also have the ability to publish Unity games into Fortnite and participate in the Fortnite creator economy. Unity said more details about this partnership and product timing would be shared next year. Futures are signaling a mixed open when the bell sounds in less than 15 minutes, but it comes amid a week of sharp declines in the tech sector. A key moment for investors, of course, comes after the bell when Nvidia reports its third quarter earnings. Joining us now, John Stoltzfus, Oppenheimer Chief Investment Strategist. John, it's great to see you.
Great to be here, Julie. Thanks for having me on the show.
So we're all waiting for Nvidia, but the setup going in is that there is all of a sudden seemingly some pessimism out there, or at least a lack of as much optimism in the AI trade. How are you reading this, John?
Well, I think if anything, it would seem quite normal. I think we were just about day to day getting upticks on the AI story reflected in the market. And inevitably, whenever it looks like trees could grow to the sky, there's some kind of a catalyst that shows up, or a number of catalysts that'll show up that'll cause an opportunity for, in the middle of a bull market, for folks to take some profits without FOMO or fear of missing out. We think that'd be the big thing. We think is the process, of course, in AI. Is it profitable today or how many years ahead, in its different applications? What's the story here in terms of investment versus profitability? But we think that's it. We think, if anything, it's just prone to negative projection on that, with the actuality, when we get to it, probably see things a lot better than some of the negative projections are on this. The other thing is it's the reopening. This is the big reopening. What damage was really done? When do all the flow of economic data coming from government entities, agencies, flow through? When do we get back where we get a more normalized view of economic growth? And then, of course, just overall, just valuations. And, the market, is about 4% off of its record high achieved on October 28th. So it's not a correction yet, but it certainly is something that has awakened everybody, I think, to the point of that markets don't just go up.
Oh, we get those reminders periodically, don't we, John? Do you think that Nvidia is going to cement that correction or salvage the market from this decline?
Well, Julie, that Oppenheimer has me not comment on specific stocks, but we would often say, because I manage money for the firm, they don't want me pitching stocks that I might own or might not own. And what we would have to say here is anytime you get a stock that becomes a bellwether for the market, and you get within its space some concerns related to current profitability and projection of near-term profitability going forward, you're going to get some. You're going to get some selling, and usually the more powerful the rallies have been, the commensurate sell-offs are not necessarily the equivalent of the rally upward, but will certainly reflect concern. So we think if a company today that is one of these bellwethers really comes across and knocks the cover off the ball, I think this will probably cure this worrisome period we've had in terms of worry over projecting where we're headed on this. On the other hand, if it disappoints, I think most of the selling has occurred, and I think that's why we're seeing in the futures today with the market, there was a little bit of green on the screen, to say the least.
Yeah. I mean, I think Nvidia at this point is almost a macro indicator. I'll have a word with your boss about whether you're allowed to talk about it more specifically, John. But so I guess I would ask, because I know you're still overweight information technology,
Yes.
or you would recommend that versus where it stands in the market. So as we've been seeing this sell-off, then is that an opportunity for investors to come in here and add to their positions in big tech companies?
We would have to think that it is indeed. We don't think we're going back to the abacus or the abacus or to the slide rule. We think it's a world of chips, and AI most certainly presents an opportunity for greater efficiencies, both for business and the consumer. We don't think this is the tech bubble. This particular period of time is a period where tech is deeply embedded in the lives of both business and the consumer. We're all on the upgrade cycle, as we say, whether we like it or not. And we do think this is an opportunity. We don't think you'd necessarily back up the truck, but you certainly look selectively for babies that have gotten thrown out with the bathwater, essentially really good stocks that in the process of a downdraft get thrown down like hot potatoes by short-term investors and traders. For intermediate to long-term investors, the 2, 3, 5, 7, and beyond periods, looking out with longer-term goals and objectives like that, we think it's a good opportunity to look. If stocks indeed are somewhat on sale in terms of the broad average, down about 4% is not any big stocks on sale moment. But when it comes to technology, tech is off 7% right now. The tech sector, 7.3% from its peak on October 28th. You've got discretionaries off 6.5%. Industrials are off 3.25%. That looks like those are areas where it might be a good opportunity to start bringing out the shopping list and evaluating where those babies have been thrown out and pick them up quick.
Yeah, I mean, and it's good to get some sectors that are non-tech as well. Got to leave it there, John, but we'll catch up again soon. Thank you so much.
Great. Thanks, Julie.
Coming up on Yahoo Finance is Opening Bid. Executive Editor Brian Sozzi is joining us right now. Soz, what's coming up on the show? More Nvidia? Is that just a guess?
Nvidia, but Julie, I got to temper my enthusiasm for the Super Bowl of corporate earnings, Nvidia for Target, because I heard you guys talking about earlier on. In my humble view, Target's quarters stunk, and they continue to report absolutely horrible quarters. This company has zero momentum. We're going to rip apart this quarter, Julie.
But now you can shop in ChatGPT for Target stuff.
Don't really care. Margins stunk.
All right. There we go. We'll talk more about it. That does it for Morning Brief. Much more ahead on Yahoo Finance.